All right, Julie, over to you with some breaking news on the economic front.
Yeah, we've got the ISM Institute for Supply Management manufacturing data coming in at 55.4 in April. That is below the 57.6 that was estimated. Interestingly, though, prices paid also below estimates and ticking down month over month. We keep having this debate about whether inflation has peaked. Here's one component that shows a little bit of relief on the inflation front. New orders, though, coming in a little bit light of estimates as well. And the employment index part of this coming in a little bit lower than estimated. So really interesting. We also, just a few moments ago, got S&P Global's reading on the same thing. It, too, was a little bit short of estimates. So all of this interesting here. This gauge of manufacturing, the overall number, now at the lowest since 2020. And again, as you saw, those various components soften as well, and shows perhaps there is lower demand for goods here. New orders and production at their lowest levels since May of 2020. They're still growing, but just not at the same pace that we have seen as of late, Soz.
Maybe some inflation fatigue, Julie, starting to appear in this economic data.
Yeah, it could certainly be. So how is all of this feeding into what we're seeing in the energy markets as well? Because obviously manufacturing, they use energy to do what they do. Add to that what we're hearing this morning, numerous Russian oil companies failing at finding buyers for their oil, and what's going on in China. For all of the more on all of this, let's bring in Dan Dicker, founder of the Energy Word. Dan, it's good to see you. So we have what looks like a little bit of choppiness coming into economic growth. We've got the situation in Russia. We've got the situation in China. What does all of this equal for oil prices?
Well, Julie, I kind of, in my mind at least, I try and split these things up into short-term problems with the energy markets and then long-term issues with the energy markets. And for, my subscribers and for you, when I come and talk to you, I tend to deal with the longer-term trends for oil as opposed to the short ones. As bad as, the latest variant of COVID might be for the Chinese, the drops in the shutdowns in China and the obvious lack of demand that'll come from that in the oil market, which is really driving prices in the last couple of days. We'll see that as a temporary setback for oil prices. These are variants that have come in the past, and they do pass. And it's unique to China because obviously their rollout on their vaccine and actually the efficacy of their vaccine is less than what we've seen in the United States. That I term as a short-term kind of problem with the energy markets. From the long term, something far more serious is going on, and that is what's going on in Russia. And not only the bans that are likely coming from Europe that they seem to have a very long-term interest in making stick. But also, and this is not talked about a lot, the energy companies, Exxon, Total, BP, leaving Russia, stranding assets in Russia. And what we've seen is that production in Russia is down more than 1 million barrels in April alone. In many ways, the infrastructure in Russia has depended upon Western energy companies to get the stuff out of the ground. And they are now missing that. And that's going to be a long-term systemic problem with production in Russia, which may ultimately lead to 3 million barrels a day of oil coming off the market from the Russian markets. That's a very, very, very big deal for long-term prices.
Dan, if Europe does ban Russian oil, where do they go for oil? And what would that mean to global oil prices?
Right. And Brian, this has been the argument. The arguments from the Europeans has been, you can ban Russian oil, but you can reroute it into China, into India, and it really does nothing to harm the Russians. Now, this is not entirely true. First and foremost, when you move it from the west towards the east, you have an issue in terms of prices. The Chinese and the Indians are paying a discount to take what is basically black market oil. Then you have an economic problem of, pushing that oil through the regular financial system, which is being shut down through sanctions. So in all ways, there's going to be a discounted profit that's going to go back to the Russians on what they can shift. Why I bring this to your attention about what's going on in production is that, yes, oil that's not sold in the West may be sold in the East, but oil that's lost from the global supply chain because of production problems in Russia is lost, period. And there's no money to be gained from that. And that, I think, is going to be the far more important aspect going forward as we move through, no matter what happens in Ukraine, if again the Europeans stay strong on banning Russian oil, and the American oil companies and European oil companies stay strong in not trying to make another quick buck in Russia when the opportunity arises.
So the oil that is getting produced in Russia, are they at this point able to sell all of that? And if not, what happens to that oil?
Yeah, and Julie, most of it has found a home. But again, a lot of it has been sold at discounted prices. And I think that the pressure that Putin is feeling from this particular part, remember, Russia depends a lot on oil sales in order to drive revenues. And, he's really been banking on this entire consortium of U.S. and European consumers, as well as U.S. and European oil companies, to lose hope or not be able to sustain this kind of pressure on Russian oil. He may be right in the long haul, but what I'm trying to warn everybody about is that if he's wrong about this, he could literally be with a treasury that's broke in August. So it's not that far away where these kinds of bans and drops in production numbers really have a major effect in what's going to go on in the Russian economy and the real impact it's going to have on Putin. In my mind, this is a far more effective way to defeat Putin, if that's what you're looking at, than all the arms in the world going into Ukraine. In the end, it will be the pressure on the Russian economy that will stop Putin from what he's doing right now.
Dan, so many folks are focused on the upside risk to oil prices. I think Goldman Sachs was out this morning looking for $125 a barrel oil this summer, but growth is clearly slowing. Consumers are clearly starting to show inflation fatigue. Can you make a case for oil under $90 a barrel this summer?
I don't, Brian. Of course, it's very hard to predict, right? You're talking about a very big macro input into oil prices, and that is, whether we're staring at what will be a major or a minor or a soft landing recession. And for me, I mean, you talk about this with people who are far more capable of predicting these things than the oil guy is. But you are correct. If we do get a very seriously deep recession, oil won't be, the one that gets away. It will also sink. My takeaway for the people who are watching is that in a marketplace where tech is getting killed and most of the consumer durables are getting killed, I will tell you that the fundamental nature of oil will make that a nice shelter in what might be a very dark storm.
Don't be bashful, Dan. You've made a lot of big calls throughout the years on oil. I've been following them all. We'll leave it there. Dan Dicker, the Energy Word founder. Thanks so much. All right, scented cinnamon